Wall Street titans, financial crises, and the man whose name became synonymous with American banking. This isn't just a story about money. It's a tale of ambition, power, and the relentless evolution of a financial empire. From its roots in the Gilded Age to its role as a modern-day colossus, this is the extraordinary journey of JPMorgan Chase. The man behind the legacy, J.P. Morgan. The year was 1907. America's financial system teetered on the brink of collapse. Panic gripped Wall Street. Banks were failing, and the stock market plunged. Desperation hung heavy in the air. Yet in the opulent library of John Pierpont Morgan's stately Madison Avenue mansion, an extraordinary scene was unfolding. The most powerful bankers in the nation, once bitter rivals, had been summoned by the man they called the Jupiter of Wall Street. With nerves frayed and fortunes hanging in the balance, the fate of the American economy lay in Morgan's hands. John Pierpont Morgan was born into a dynasty of wealth and power in Hartford, Connecticut on April 17, 1837. His path was always tilted towards the world of finance. His father, Junius Spencer Morgan, was a renowned banker and a founding partner of the powerful merchant banking house George Peabody and Company. Young Pierpont received a privileged education suited to his family stature. He attended elite schools and traveled extensively throughout Europe, where he honed his fluency in French and German. These skills would prove advantageous in later international dealings. The elder Morgan instilled in his son a deep sense of responsibility and a shrewd understanding of the mechanics of finance. Junius was a demanding mentor. Pierpont's fierce ambition and determination were fueled by a desire to make his mark on the world and, perhaps, surpass even his influential father. Even as a young man, J.P. Morgan exuded an aura of authority that set him apart from his peers. He possessed a natural confidence that bordered on arrogance. Pierpont believed in his own abilities and took calculated risks others shied away from. Driven by ambition and a near-obsessive need for control, J.P. Morgan was a force to be reckoned with in the cutthroat world of Gilded Age finance. Yet beneath the stoic facade lay a complex personality. He was prone to bouts of illness and occasionally melancholic, but he was also capable of genuine kindness and a surprising sentimentality. He was a passionate patron of the arts and amassed an extraordinary collection that would later form the foundation of the Metropolitan Museum of Art. J.P. Morgan was a man of contradictions, a titan of industry with a deeply human interior, and it was this complex blend of ambition, ruthlessness, and unexpected vulnerability that would both propel his meteoric rise and mark him as one of the most fascinating figures of American business. Following in his father's footsteps, J.P. Morgan began his career as a banker in New York City. His rise was swift. In 1871, he partnered with the prominent Philadelphia financier Anthony Drexel to form Drexel, Morgan & Co. The firm quickly emerged as a dominant force on Wall Street. Its reputation was built upon Morgan's shrewd investment strategies and ironclad business ethics, but Jupiter Morgan's ambitions did not stop there. In 1895, after Drexel's death, the bank was reorganized as J.P. Morgan & Co. This was the first step towards cementing its founder's legacy. From its inception, J.P. Morgan & Co. played an instrumental role in transforming the American economy. The Industrial Revolution was in full swing. It fueled innovations in railroads, steel, and electricity. However, these ambitious enterprises needed vast amounts of capital. JP Morgan became the ultimate financier of this transformative era. His company underwrote bonds and stocks for burgeoning corporations and provided essential investment to fuel their expansion. Morgan understood something critical. The railroad was the backbone of America's economic growth. He orchestrated mergers between struggling railroad companies and created vast, efficient networks that spanned the continent. This consolidation brought stability to a volatile industry. It facilitated the movement of goods and people and further drove economic development. Morgan's hand can be seen in the creation of powerful corporate giants like U.S. Steel. These are companies whose names would become synonymous with American industrial might. Beyond the boardrooms of his Wall Street office, J.P. Morgan was a master of mergers and acquisitions. With a visionary's eye, he saw the potential for greater efficiency and control through consolidation. His strategic maneuvering not only expanded his own empire, but reshaped entire industries. A series of critical mergers formed the backbone of what would eventually become JPMorgan Chase. In 1959, JPMorgan & Co. merged with the Guaranty Trust Company of New York. This created the Morgan Guaranty Trust Co. The union combined Morgan's investment banking prowess with Guaranty Trust's commercial banking expertise. It became a formidable financial institution. The bank's growth trajectory continued in 1996 with the acquisition of Chase Manhattan Bank, founded in 1799 by Aaron Burr. The Chase Manhattan name carried historical prestige. The resulting powerhouse gained Chase's vast retail banking network, a significant complement to Morgan's established position. The final piece of the puzzle fell into place in 2000, when this combined entity merged with JP Morgan & Co. The merger effectively united two of America's most distinguished banking lineages under one roof. The name JP Morgan Chase & Co. was born. The tale of JP Morgan Chase and its predecessor institutions is woven into the tapestry of American history. JP Morgan & Co. was pivotal in financing America's war efforts during World War I when it mobilized vast resources to support the nation's military might. Similarly, the bank played an instrumental role during World War II, yet the road was not without its challenges. The Great Depression of the 1930s tested the mettle of countless financial institutions, and those associated with the Morgan name were not immune. The infamous Pecora hearings in 1933 subjected the bank to intense congressional scrutiny. The resulting Glass-Steagall Act forced a separation between commercial and investment banking. Despite these hurdles, the bank endured and ultimately flourished, so much so that its influence rippled across the decades. The company was at the forefront of financing the reconstruction of Europe after World War II, and as the world became increasingly interconnected, it played a prominent role in global finance. The legacy of JP Morgan, the bold risk-taker and master consolidator, lived on. The legacy forged by JP Morgan has culminated in a financial institution of staggering global influence. Today, JP Morgan Chase & Co. is a true titan of the industry. Its reach extends around the world, and its operations shape the very nature of modern banking. JP Morgan Chase has operations in over 100 countries. Its workforce is equally massive, numbering over 270,000 employees worldwide. From bustling financial hubs like New York, London, and Hong Kong to emerging markets in Africa, Latin America, and Asia, the company maintains a robust international presence. This sprawling network allows JP Morgan Chase to capitalize on opportunities around the world and service clients across continents. At its core, JP Morgan Chase is divided into four major segments. Each demonstrated the breadth of its financial services. Consumer and community banking is arguably the most familiar face of the company. Millions of customers rely upon Chase Bank for traditional retail banking services such as checking and savings accounts, mortgages, credit cards, and auto loans. The corporate and investment bank is a powerhouse in the world of global finance. This segment caters to large corporations, governments, and institutional investors. Its offerings include advisory services, mergers and acquisitions guidance, underwriting of securities, and complex financial transactions. In commercial banking, JPMorgan Chase serves a vast array of businesses. The company provides lending, treasury and payment solutions, and commercial real estate expertise. These services form the backbone of financial support for enterprises of all sizes. Then there is the Asset and Wealth Management Division. With trillions of dollars under management, this division is a major player in both institutional and individual investing. Services span investment strategies, retirement planning, private banking, and philanthropy management. JPMorgan Chase's stature isn't simply anecdotal. The numbers speak for themselves. The company has a market capitalization of almost $600 billion. Its annual revenue is almost $250 billion, and it has almost $4 trillion in assets under management. These figures place JPMorgan Chase among the largest and most successful financial institutions in the world. But like any company of its size and influence, its journey has not been without its share of controversy. Lawsuits over the years have ranged from alleged mortgage lending abuses to accusations of market manipulation. Despite these disputes, the bank remains committed to innovation and technological advancement to remain competitive. These efforts aim to streamline processes, personalize customer experiences, and mitigate risks through advanced analytics. The company's massive scale also allows it to incubate and develop its own fintech solutions, occasionally spinning them off into independent companies. However, navigating a complex and highly regulated industry means that controversies can sometimes follow. In recent years, the bank has faced scrutiny for its role in financing certain environmentally contentious projects. It has also been investigated over its policies surrounding overdraft fees. These situations highlight the ongoing challenges of balancing profitability with social responsibility in the modern banking landscape. The rise of nimble financial technology companies, known as fintechs, is reshaping the way people bank. From peer-to-peer payments to digital lending platforms, these startups are offering consumers convenient alternatives to traditional financial services. JPMorgan Chase must adapt, and it has to do so either by acquiring promising fintechs or developing in-house solutions. Without it, JPMorgan Chase will not remain competitive in its increasingly tech-driven market. In the wake of the 2008 financial crisis, the banking industry has faced heightened regulatory scrutiny. Increased compliance requirements add layers of complexity and expense to the operations of large banks. While necessary to safeguard the financial system, this ever-changing regulatory landscape creates an ongoing challenge for institutions like JPMorgan Chase. Today's consumers are digitally savvy and demand seamless banking experiences at their fingertips. Branches are becoming less frequented as customers gravitate towards mobile apps and online platforms for their everyday banking needs. JPMorgan Chase must invest heavily in intuitive technology and personalized digital offerings to cater to these evolving consumer preferences. Jamie Dimon, the long-serving CEO of JPMorgan Chase, is a vocal leader who frequently shares his perspective on the company and the industry. In recent interviews and shareholder letters, he has emphasized a few key strategic priorities. Dimon has stressed that technology is the battleground of future banking. JPMorgan Chase's massive annual technology budget reflects its commitment to building cutting-edge platforms and employing top engineering talent. While already a global player, Dimon eyes further expansion. Notably, he's focusing on the burgeoning Chinese market. Navigating diverse regulatory environments and establishing a foothold in new territories will be essential for continued growth. As financial transactions increasingly take place in the digital realm, cybersecurity risks loom large. bank data breaches can have devastating consequences, both financially and reputationally. JPMorgan Chase must be vigilant in fortifying its defenses against relentless cyber threats. Even the most robust banks are vulnerable to the swings of the global economy. Recessions lead to decreased lending, potential loan defaults, and reduced investment banking activities, all of which can hit the bottom line. But these are all built into JPMorgan Chase's strategy. While predicting the future is a fool's errand, we can venture some reasoned projections. JPMorgan Chase is poised to remain a formidable force in the banking world for the foreseeable future. The bank's sheer scale, its technological investments, and the company's commitment to innovation give it inherent advantages. If it can successfully navigate a changing regulatory landscape and fend off disruptive fintech competitors, JPMorgan Chase is likely to celebrate many more milestones in the decades to come. However, external factors like the global economic climate and the pace of technology change will play a major role in shaping the bank's specific trajectory. So, from the Gilded Age boardrooms of JP Morgan to the globalized, technology-infused world of today's finance, JP Morgan Chase has been a transformative force. Its history mirrors that of American business: audacious, risk-taking, relentless consolidation, brushes with controversy, and ultimately extraordinary success. Through wars, recessions, and technological revolutions, the bank and its predecessor institutions have remained a pillar of the financial world. While the future holds uncertainties, one thing remains clear: the legacy of JP Morgan Chase is etched firmly into the annals of global finance.